Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday morning pre-market webcast. Okay, so what you've got here is just a steady march to the upside. And the target is upper band. It's sitting at around 27, 22-ish. It'll take a 23 or a 24 print to engage it. And then what we have to ask ourselves is, are we going to go on an upper band ride? Relatively speaking, the Bollinger Bands are tight-ish just over the last couple of days. You can see back here, they got tight, but even at that time, you were only really talking about 4.5. We're talking about 5.7 now. I mean, the volatility has got the bands just in a baseline situation, they're pretty wide. But they're not so wide that they could not support a band ride. The bands back here supported a lower band ride, 5-6 days worth. And if every dip continues to be bought and these moves continue to be, fairly strong, you're going to continue to get this slow bleed to the upside. This has been a very easy move to fight price on. I have fought price on this move more than I've probably fought price on any steady up move in years. For whatever reason. You're not going to trade them all perfectly all the time. And, I'm certainly guilty of that. I was guilty of that yesterday. If the bears want to matter now, they've really got to get below 2,700. And the more they do this, the more and more it starts to look like just this steady grind to the upside that we've seen so many times. You got a long way to go before you get back to all-time highs. But how price reacts to the upper band is going to be important. So, you look on an hourly chart and, it never even sniffed the hourly mid-band yesterday. It just went. And any compression that we've seen on the hourly has resolved, pretty nicely to the upside. So higher lows, higher highs, no engagement with the hourly mid-band really until the 6 a.m. candle here, and it acted as support right down in the area of 2709 half. So, the hourly mid-band is something I'm always going to be looking at. Today, the 5-minute mid-band, if we start to get a little bit trendy to the upside, is something that's going to be important. So as long as price stays on top of those areas, then, we can kind of see what price wants to do. But I think your baseline assumption today, is you're going to want to buy dips. All right, everybody have a fantastic day. Join us after the close. We are doing a free webinar for everybody. It's on overtrading, self-awareness, recognizing different types of tapes, and then we'll talk a little bit about entries and exits. So some juicy topics to get into if you trade this stuff. And overtrading is something that this type of tape will really get you to do a lot of. And then, when I talk about different types of tapes, high volatility, low volatility, whippy, choppy, dead, different types of tape. Recognizing them and recognizing what tape is right for you and what tape is not. So something that anybody out there really needs to know no matter what they're trading. All right, everybody have a fantastic day. We'll have some stuff out on social. Until then, trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.